Mr. Harshal Baroth here now.
Okay. Check. Good afternoon, ladies and gentlemen. It's been an honor and pleasure to be presenting in front of such a esteemed audience and dignitaries here. So my presentation here is on the global gold market. While it's a challenge to speak about the gold market in just 15 minutes, but I will try and make sure that I do justice to it. Uh, so now that my introduction has already been done, I will quickly start with a brief introduction of Metals Focus as a company. We are a London-based organization, probably the largest team in the world tracking just precious metals. We have offices in 8 countries, and our products range from research, consultancy, and some of our reports are also used for sponsorship and advertising. Uh, Starting with an overview of the global gold market, it's difficult to speak about anything about the gold market without understanding the demand and supply of the market. And if you look at the chart of the last, since 2010, if you see global gold supply has averaged 4,700 tons annually, and while demand has averaged around 4,300 tons. Now, if you just make a cursory look at this chart, you might see that supply has, in a way, constantly outpaced demand in the global gold market, and which makes you believe that if it was any other commodity, the price would have been falling. But gold is not just any other commodity. We've seen that it is used as a reserve asset. It acts as a currency. It acts as insurance during times of geopolitical uncertainty. So that role that gold has played is very evident when you look at the price action over the last few years. Just quickly glancing through the mine production globally, this is a chart which basically shows you year-on-year changes, first 9 months of 2023 compared to 2022, and basically the biggest producer of gold remains China over the last few years, followed by Australia, Russia, Canada, US, and Mexico. And this is one chart that I think a lot of people have interest on. A lot of discussions when we have people keep asking about, what is the cost of production of gold. So here the metric that globally is used, by mining companies and also the World Gold Council is the concept of all-in sustaining cost. So this is basically the cost that includes, all the mining expenses, including future exploration costs, capital expenditure. So it's a term. And when you look at the chart, it says that, given where the gold price is, more than 95% of gold production in the world is very, very profitable at the moment. The global cost of production at the end of 2022 was 1,200 tons. This year, we believe it is more likely to be 1,250 tons. And given that gold price is about $2,000, you can see the kind of margins that mining companies are enjoying. And when I spoke about the first slide about demand and supply gap, you see here over the last few years, the global market has been in a surplus. When I say surplus, this is basically market balance. We calculate supply minus demand. So when supply is exceeding demand, we call it as a surplus market. Of course, the level of surplus has been reducing over the last few years, which is also supportive of prices. But in general, supply still is outpacing demand. And when it comes to demand, this is a chart that just shows you the changes in demand in the first 9 months of this year. The full year data, the World Gold Council will soon release. We've already submitted the data to the World Gold Council, but they'll soon come out with the full year numbers for you. But in the first 9 months, of course, the demand has suffered across the world, especially given where prices are. Jewelry demand across the world, not just in India, has taken a hit. But one standout thing in this is central bank demand, something which Som touched upon in his speech earlier as well. If you see, central bank demand has been the one big positive even this year. And if you look at the trend in official sector purchases over the last few years, you clearly see that in the last 2 years, central bank demand has nearly doubled from where it was compared to pre-pandemic levels or even 2021 levels. So the Russia-Ukraine war and this constant geopolitical uncertainties that we see across the world has led to this sustained central bank buying that we are seeing. And just to put that into perspective for you, if you look at the 5-year average before the last 2 years, this is just the breakup of global gold demand. You see 53% is jewelry, followed by investment, and central bank demand was just 12% of global gold demand. And come 2022 and the Russia-Ukraine war, we've seen this pronounced shift in central bank buying. And if you take at the last 2-year average, central bank demand has nearly doubled as a component of global gold demand. It's now roughly 25% of all gold demand annually. So basically, central banks in a way are trying to diversify their dollar reserves. And this chart from the IMF is again testimony to that. If you see the share of US dollar in global reserves, since the introduction of the euro in 2003, we've seen the share of US dollar consistently decline. So it was 66% at the start of 2003. USD is now down to 59%. So gold is definitely benefiting from that move away from the US dollar as well. Now, any conversation about the global gold demand is incomplete without speaking about India. India being the second largest or sometimes the largest consumer of gold in the world. And this is chart quite in contrast to what we see for the global demand. In India, jewelry by far is the biggest component of demand. You know, on an average, we've seen 75 to 80% of India's gold demand being driven by the jewelry sector, followed by investment. And you know, even though jewelry is dominating, if you look at India's imports, and this is a point I think which will be often discussed, even Som touched upon this, is that even though the India's economy is growing, industries, consumer industries, electronic industries, premium products, everybody is seeing their market grow, but India's imports on average have remained around 800 tons since 2010. So this is something I think the industry has to ponder upon, because all the jewelers, all the manufacturers that we speak to, they do say that, you know, in terms of grammage, the market is really not growing. Value-wise, of course, people are reporting better sales, but it's the absolute amount of gold that is being consumed that has not really changed. Yes, you have years when you've seen 1,000 tons of demand, but it's basically averaging out. If you look at a long-term average, we're still around 800 tons. And I think two important things we see that have also, you know, contributed to this in a sense is that the changing market share of retailers in India. We've seen this phenomenal growth of branded chain stores in India with that expansion that we are seeing. So they consistently are gaining market share at the expense of single independent stores. So, 10, 15 years ago, from less than 10% market share, they were at, 35% market share by the end of 2022. And we believe over the next 5 years, this share could easily, reach 45%. So this is something that is happening. But as I said, the overall pie of demand is not growing. It's just that within the pie, we are seeing the market share shifts happening within the Indian gold industry. And to some part, I think it is also, we've seen people talk about margins being compressed in the industry with the growth of even the branded chain stores. I think the plain gold jewelry segment in India is suffering from low margins. So I think there is this effort by the industry to push more studded products to improve their margins, and which is also now getting reflected in the data. We expect that from 20% all India average in 2022, I think the share of branded jewelry, studded jewelry, is likely to increase to 25% in the next 5 years. And a lot of retailers that we speak to even now, some of their shares are even 30, 40%. Even in places like the South, which was traditionally a very plain gold dominated market, we've seen the share of studded jewelry increase. So this, in a way, because studded jewelry tends to be more 18 karat, is impacting the absolute quantity of gold that India is consuming. And I think this is another trend to watch out for in the coming years. So I think we still have time for questions from the audience. While people ask questions, this is just a brief of our team. Globally, we are here for the next 2 days if you want to have any conversations about India or about the global gold market, and happy to discuss some of our findings with you as well. So that's it from my side. Thank you. You've been a wonderful audience, guys. Thank you.
We request Mr. Naval Agrawal to please join us on the stage, and we would like to appreciate the efforts. We would like to present a token of appreciation. Thank you so very much for the wonderful presentation. Ladies and gentlemen, we hope you are enjoying all the sessions along with that. Thank you so much. Along with that, everyone, we are taking a quick lunch break for 30 minutes so that we can complete all the sessions on time. We request you to please have your lunch, enjoy your lunch, and please join us back exactly after 30 minutes on your respective seats. Thank you so very much.